How's it going, everyone? It's Sam. I need to talk to you about the latest stock that Ark Invest just bought. And this is one that someone had told me about a while ago. I had not bought, but it's shooting up after hours today. They have an insane growth rate too, which is something we need to talk about. This is one that I might be buying in, and it hurts because I had a chance to buy it when it was cheaper, but I still might be buying it soon because it is a really interesting company. I had looked at it before, but man, this one is growing so quickly. It's in an industry that I'm already invested in, and just take a look at their growth. So I'll explain what the company is, how much Ark Invest bought here in a minute, but look at this. 4 million in quarterly revenue back in 2018, moved up to 8 to 12 to 16 to 20, all the way up to 36, 186% compounded annual growth rate. Quarterly average order value just over doubling, about 2.5xing over the last 2 years. They have subscriptions, they have straight up payments. They have a lot going for them. And this is something that we need to talk about because it is growing so quickly and because Ark Invest has been buying. So if you guys don't mind hitting the like button, I really appreciate that. Please hit subscribe if you haven't done that already. Both of those things mean a lot to me and I really appreciate it. Also, there is a link down there to WeBull. If you guys want to sign up, you can get 4 free stocks worth up to $3,700. And they have something going right now where you can win a free share of Facebook. They're giving away 4,000 free shares. You just have to do a couple things on the program. So definitely check that out. I actually got a free share of Facebook just from a bonus stock today. So definitely check out that link down below. That was about $275. So definitely something worth checking out. Also, there's a link down there to my Patreon if you want to know exactly what I'm buying and selling. So if I do buy this, I will let you know on the Patreon as soon as I do it. So definitely check that out down in the description below. So thank you guys, and let's get into it. So the company that we're looking at today is called Hims and Hers Health. So this one shot up 31% after hours today, and you can see it kept on going up. As soon as they released that they bought it, it shot up 23%. Now, if you don't know what they are, they're a telemedicine company. Ark Invest bought $6 million worth. They bought it for the first time today. They bought 461,000 shares, and they bought this in their Ark G portfolio. This is their genomics portfolio. Now, just looking through the company, right? They are trying to bring telemedicine to right now, it's really focused on millennials, or at least that's what the majority of their base is, but they're looking to just bring telemedicine to the masses. The US healthcare system is one of the largest multi-trillion-dollar markets yet to be disrupted. Now, to be honest, I am invested in Teladoc. I'm up about 50%, 50% in Teladoc, and the reasons behind telemedicine, first of all, it's less expensive. There's less overhead. You're not going to a brick and mortar. It's more accessible. So, there are rural areas that people just can't get to, or even, urban areas where people can't get into the doctor's office, or maybe there's just not enough time. And it's also way more convenient to be able just to call in, be able to participate in a telehealth or telemedicine type appointment, as opposed to driving, waiting, filling out paperwork there, sitting, waiting for the doctor. And, I did read an article. It said the average doctor's visit from start to finish when you leave your house is over 2 hours. So this is something that will really be disruptive, I believe, over the coming years. So just looking at how they set this up in general, they have some issues apparently that you can kind of select from. You can talk to a doctor, and then you can get your orders sent to you, it looks like. So really, they want to be as fast and efficient, comprehensive and affordable as possible. Now, they have 240 U.S. licensed providers with an average of 14 years in practice, 94% average provider quality score, and 4.7 out of 5 average patient rating. So they do have some good numbers. People really like using them. They are getting into a lot of different things. First of all, they have hair loss, $3 billion industry. They have erectile dysfunction, $4 billion, anxiety, depression, $14 billion, dermatology, $44 billion. They are trying to get into all these different markets. Now, they're also talking about how this could be a future opportunity to jump into business with employers, right? They're saying that this is a cost-conscious option for employers and that this would save them a good amount of money. Now, like we said, they have had massive revenue growth, 128% revenue compounded annual growth rate from 2018 to 2020 expected, 71% margin. So 71% gross margin as of last quarter, or as of Q2 2020. And they've been able to increase these dramatically. Like we said, 128% compounded annual growth rate for revenue. So a huge growth rate in percent gross margin from 29 to 54 to 71 year over year. Now, they also have revenue by different products from sexual health to hair to wholesale. They have prescription and non-prescription. So the prescription, they have 83% in, and then you can see subscription is actually 91% of what they earn or of their revenue, which I really like to see. That's reoccurring revenue. This is an interesting company for the fact that they're growing so quickly, but what can they do in the future? Well, they're saying that they expect a 30% growth rate this coming year. They expect a 30% growth rate after that. They're expecting their gross profit to continue up a significant amount, and they're expecting to hit profitability right around 2022 or 2023. This was a SPAC. So they merged with OAC, and again, we could have gotten it at $10 a share, but until recently, it really hadn't moved much. I mean, it moved from $10 all the way up to about 18. Now it's in around 17 after hours. So I think this is still a decent value, because even at, let's say, $20 a share, that would put them at a pro forma enterprise value around $3 billion. And right now, this is a very quickly growing sector. They're expecting 138 million this last quarter, or this last year. So they would be about 20 price to sales ratio. Now, I realize that's very expensive, but for a company that's growing this quickly, I think it almost makes sense. I mean, we've seen companies that earn a lot less that have much higher valuations. So I like this company. I might be buying again. Ark Invest is buying. Usually they continuously buy. I think we will see this move up tomorrow, because there are a lot of people that can't buy pre-market that will probably want to get in when the market opens. A lot of the people that are outside the US. So that's something I would take into account. Now, do your own research with this one. Of course, I'm not a financial advisor, so definitely do all your own research. But thank you guys so much for watching. If you want to see a video I did earlier on Wall Street bets taking on the institutional investors, I'll put it up on the end screen. Thanks for checking out WeBull and the Patreon, and I'll see you in this video here. Bye.